Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Paul Sweeney. Join us each day for insight from the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.
Monica DiCenso joins us. She's now head of global investment opportunities at JPMorgan. But Monica, you and I we crossed paths years and years ago when you were at Bear Stearns. Ray Katz, Victor Miller,
Yes.
Alan Schwartz, all the great media folks at Bear Stearns covering the radio, TV broadcasters, the tower companies. Tom, at one point,
the tower companies.
Those were great sectors.
Things that don't exist anymore.
Things that don't
My job was to read those prospectuses, and I read them from the back to the front. My question to both of you then is radio, just in Good Morning on Bloomberg Radio then, was it's 14 times EBITDA, it's cheap.
Yep.
Are we in for that right now, Monica? Are we? Where's the blow up right now that's 14 times EBITDA?
Yeah, I don't know that I see anything that clearly that looks that misvalued. What we do see, though, is you look at the broad S&P 20 times, and again, I think back to where we were back in those days, and it does feel fairly to fully valued. And so the struggle now is you see the market down a couple percent, maybe do you jump in and buy? I think you probably see more volatility heading into the fall and into elections. And so I would use any pullback of 3-4% or more to start legging in. As you mentioned earlier, I work with families all over the world, and most of them, unfortunately, don't have enough risk on in their portfolios. They're still sitting in too much cash. And so I'd love to say I'm waiting for 10% down, but I don't know that we're going to get that. So 3 or 4 might be enough to nibble.
So, I mean, you work with ultra high net worth individuals, family offices, those types of folks.
Yeah.
Are they participating in this Magnificent Seven thing over the last 12, 18 months, or maybe or not?
They're participating, but most don't have as much as they would like. Okay. Because what happened in 2022, as you well know, when tech sold off and everything got a little scary, many of them moved to cash. They have that luxury. They're not, it's their personal money. They don't need to be in markets. And then they were hoping for a pullback in 23. Most never actually got back in as much as they wanted. And so now still a bit offsides. Too much cash, not enough risk for generational wealth that they have that they really should be focused on compounding.
So that generational wealth, again, these ultra high net worth individuals that JPMorgan deals with so well, are they still in a 60-40 kind of environment? Are they 60-40, but I need to have some alternatives? Or are they maybe even more cash than a 60-40 portfolio would suggest? Yeah,
a couple of big trends. Right now, again, still too much cash, but that's a function of that fear coming out of 22 and that year when nothing worked. Bonds down, equities down, that rattles people. Broadly, larger families we work with tend to have much bigger allocations to alternatives, to your point, because again, this is not money that they're going to need for the next 5 or 10 years. And so if you can take that illiquidity, that generally is going to pay, and we hope that you're going to earn more than you'll get in public markets. So larger families we work with might have upwards of 40-45% alternatives. Doesn't make sense for a normal retail investor, but when you get to that size, hundreds of millions of dollars that you're investing, you can do that, which pays off in the long term when you're compounding.
Ace Greenberg would say, don't over diversify. To me, one of the diseases right now is massive over diversification through passive and ETFs. Do fancy people with fancy accounts, do they have the courage to be less diversified and bet on a sector or bet on a company?
They do. Many, have made their wealth in one sector or one part of the market, right? It could be autos, could be tech. And so as a result, often they'll have a concentrated position in one sector. That then argues that you need diversification elsewhere.
Away from it.
Yeah. And so we spend a lot of time helping them think about where is your risk. Again, you're a tech founder. You're locked up in a stock. We've got to have you in bonds. We've got to have you outside of the U.S. We have to have you thinking about, again, alternatives, infrastructure. I don't know who's going to win the election, but I'm pretty sure we need to spend more on infrastructure. And so there are bets like that make a lot of sense.
Get another question here, because I want to go to an entertainment. I just want to go, I want to go back to Ray Katz. Go.
How about bonds? I mean, fixed income. I mean, you put a client in a 2-year treasury and get 4.5% 4% here. What are you guys? How are you guys positioning fixed income to your clients?
Again, it's getting people comfortable with that playbook after being out of it for a decade. So a couple things. You're a U.S. taxpayer, munis. Don't have to overcomplicate things.
Right.
Munis make a ton of sense, especially in a world where people are worried about what is the tax regime going forward and what are my tax rates going to be. Also, adding a little bit of duration, taking a little bit of risk. Bank preferreds, I still think make a ton of sense.
Listen to you.
Yeah, you like that? Citi yesterday came out, issued $1,000 par, 7% coupon.
Yep.
If you're a U.S. taxpayer, that's almost a 9% tax equivalent
Can
yield.
mortals buy those, or are they crowded out by institutions?
They tend to be more held by institutions, but absolutely retail investors
What about
can
muni?
go in and
How
buy
do
them.
you affect a muni transaction for a family office portfolio? Individual?
Some want individuals. I mean, most actually, again, they like to see the line item. I think psychologically for families that makes more sense versus a fund where you just don't know what's going on under the hood. And so we'll do a lot of separately managed accounts, SMAs, and then depending on what tenor duration they're comfortable with, we build it to cater to that.
I do a laddered munis.
Yeah.
That's what I do.
Very good.
So
Yes.
all my maturity. I'm all
CFA
good.
level 4.
Sure.
To both of you, I talk to Paul about this all the time. Monica, let me start with you.
Yeah.
In the turmoil of what you used to follow, is Disney like the mother of all values, or is it a busted blue chip?
Yeah, I'm having a flashback to last time I was on with you. You tried to get me to talk about a single name, and JPMorgan doesn't love that. But I don't cover Disney as closely anymore, so it would be reckless for me to opine in
Okay,
detail.
Hollywood. Are you
But
long or short Hollywood?
at the end of the day, people still consume media and content. And so how they consume it has changed from when, Paul and I were doing this many years ago, but people still watch stuff. You're on an airplane, everyone's on their iPad, everyone's on their phone. It's just pivoting to how they want to consume it and the bite size and the length and duration, all that. But great content is great content. And so I, personally still own some of those names that I used to work with many years ago. And I think they make sense in a portfolio.
She's in trouble now.
Yeah.
General counsel's over on Park Avenue. Going, what did she just say?
Are they in the new office yet? I mean, because that's still being
it's still being built.
All right.
I did a tour last week. It was amazing.
Oh, did you? Yeah.
What was the takeaway from the tour?
Takeaway from the tour is that building is really tall, and if you're afraid of heights, I don't recommend going up there when there's no windows in there because it's a bit breezy.
We're going to do a remote there.
All I want to know is, like at 425 Park, is there going to be a fancy bar at the bottom?
There's the fancy bar at the top, I've been told. That's
Okay.
So.
All right.
I mean, not yet, but that's the
surveillance
dream.
remote.
Top of the diamond.
Surveillance remote. Yeah, exactly. Top of the diamond.
Monica DiCenso, wonderful. Don't be a stranger. This was great, particularly talking about the shop that Kay Booth and Alan Schwartz built years ago. So much of the heritage of Bloomberg surveillance and Bloomberg on the economy is actually talking to people that have stopped and really thought about the moment we're in. On the high ground of that concept is Gautam Mukunda, who is at Two Rivers Group, which barely describes his contribution to thinking about leadership. At MIT, at Harvard, a Yale lecturer now, but particularly his political science at the Massachusetts Institute of Technology a number of years ago. Gautam, thank you so much for joining us. And I just want to go back to Picking Presidents, a book you put out 2 years ago. Nice timing, Gautam. You nailed that. And in it, you go right to the heart of what I was talking about with David Gura Sunday, I guess. Harry Truman and the system at its best. I was trying in my inept way to explain why 1952 and off the death of FDR in 45 matters. What did they do with Harry Truman that we're stumbling on right now? What do we learn from that era?
Well, thank you for that introduction. One of my friends texted me when Joe Biden said he wasn't running for re-election and said, usually when people say they wrote the book on this, it's a metaphor. And so for Truman in 1948, let's think of this through for a second, right? Franklin Roosevelt runs for president in 1944. He's running for his fourth term in office. Democratic Party insiders know that he is terribly, terribly sick. Everyone who spends time around him can see that this is a man who is not long for this world. But he is Franklin Roosevelt. If he runs, he's going to win re-election. Nobody has any real doubts about that. And that means that they are really electing his vice president. And Henry Wallace, who had considerable virtues, I'm not saying he's an all-pro. Henry Wallace was a man of not just to the left, but the far left. And Democratic Party leaders looked at him and just said, this guy cannot be president of the United States. And in particular, they said he cannot be president in the context where in a post-war world, we're going to be worried about the Soviet Union. And so Democratic Party leaders did what functioning parties do. They lined up, they created a pressure campaign to push walls off the ticket, and they picked what they decided was the best person in the Democratic Party to take his place. And in that, they got Harry Truman. And Truman they were enormously rewarded by his sort of really quite surprising in some ways success in the presidency.
Yeah.
But when we think about this is what parties are supposed to do. This is how they function.
Can I say, Paul Sweeney, it's just jump in here, Paul, but it's just simple. J.D. Vance, you're no Harry Truman. Let's go with that.
Hey, Gautam, give us your views on what the Democratic Party just went through over the last several days with President Biden stepping down from the campaign and I guess Vice President Harris kind of taking the mantle here. What's your take?
Yeah, so the first is what I said, is that this is a party functioning the way that they're supposed to, which, give them credit. A week ago, I don't think any of us would have thought that the Democratic Party was dysfunctional, right? That its ability to sort of line up and then move this and make this happen so seamlessly is not something that I think many of us expect. And it's certainly not something that I expect. I thought that the transition would happen, but I thought it would be longer, more awkward, and much bloodier than this. Second, when you're looking at Vice President Harris itself, I just want to think this through, right? She could not have found out that she was getting Joe Biden's endorsement, that he was stepping down. At the earliest she could have found out was noon on Sunday, right? Noon on Sunday, because the decision wasn't made finally until that morning. By noon on Monday, less than 24 hours later, she had secured the endorsement of every single plausible contender for the nomination. Whitmer and Pritzker were the last two to fall, and they both endorsed her Monday morning. To do that from a standing start is actually quite remarkable.
Right.
It is not something I think many people would have expected. Right. It's certainly not something I would have expected.
Gautam, how about former President Obama? Are you surprised that we have not necessarily heard from him yet? And when do you expect to hear from him?
No, he put out a statement saying, look, I have always made a policy of not making these endorsements. He didn't do it in 20 with Biden. What I would say is it's clear that party insiders know exactly who he favors. Right? He doesn't have to make a public statement for everyone in the party leadership to know who he thinks should be the next nominee.
Right.
So the lack of a public statement is him being consistent. And I think to some extent him also kind of maybe it's a way of sort of showing respect to Joe Biden, right, whom he didn't endorse last time around.
Okay,
if he didn't endorse Biden, how could he do it this time?
In the time we've got left, I got your next book for you. I know you're doing nothing this summer, but you can go up to Maine and write it off the shores looking out at the Atlantic Ocean. Your next book is called Picking Vice Presidents. You've got to be kidding me. How does Vice President Harris go about, let's just say for the conversation, the derby of an astronaut from Arizona, a guy from North Carolina that's new on the block, plus they need him for a Senate run in North Carolina, and a Jewish governor in Pennsylvania? How do you prosecute that given your expertise?
Well, you got to toss in maybe the leading candidate is Andy Beshear, the governor of Kentucky, right? So my personal bias is Mark Kelly, because then Katie Hobbs can appoint Scott Kelly, Mark's twin brother, to the Senate, and I think that would just be the funniest thing to happen in the history of American politics. And honestly, we could all use a good laugh. But more seriously, the Democratic Party has the problem of its principal virtue, which is it's got a really deep bench right now. Beshear has strong appeal to sort of working class whites. Kelly brings Arizona back into play. Shapiro probably takes Pennsylvania out of play and just makes it a solid blue seat. These are all ones. I suspect it won't be Cooper, who obviously has been fantastic in North Carolina, just because the Democrats are going to double down on we are the young face of change that Kamala Harris gives them, and Cooper is in his late 60s.
I got 1 minute left, Professor. How does President Trump respond to what we've seen the last 3 days and what we will hear from President Biden this evening?
So I got a text from a very, very senior Republican this morning saying, this is a quote, "I stand corrected. I thought she would be a disaster, and this has been the best 3-day rollout she could possibly have had." I think he will find a way to respond. I would never underestimate Donald Trump's cunning, but his standard attacks are really going to run into problems here, because by running against a black woman, the sort of dog whistle politics that he's used to, he's going to be really tempted to go over the line. And we've already seen a bunch of House Republicans start calling her, a DEI candidate, things like that. Just to put this in perspective, 6 years as Attorney General, 4 years as Senator, 4 years as Vice President. She is way more qualified than, J.D. Vance or, George W. Bush not that long ago.
Okay, Professor Mukunda, just quickly here. What should the Red Sox do at the trade deadline? Should they trade or hold on?
You always need starting pitching.
Okay. Well, that's what Paul Sweeney says as well. This has been wonderful. Don't be a stranger. Gautam Mukunda, definitive folks here. I really can't say enough about his book, Picking Presidents. Shockingly prescient. Can I just say that Dan Ives, for those of you on Bloomberg Radio, you're lucky you can't see this.
Yep.
He's the kind of guy who takes a Williams-Sonoma tablecloth and makes it into a shirt. That's what he looks like.
He's got lemons and
he's got lemons shirt. And it's great.
Lemons. He's looking sharp as always. Lemons on his shirt, pink pants, all that kind of stuff. Crazy sneaks. I'm not sure what's going on there. Dan Ives, Managing Director, Senior Equity Analyst at Wedbush Securities. Dan, thanks so much for being
great to be here.
In studio with us. Talk to us about Tesla last night. The numbers came in on the boring old automobile business weaker than expected, but again, he's trying to get folks to focus on other issues, whether it's AI, robotaxi, whatever. What was your takeaway from the quarter?
I think it's a tale of two cities. If you want to focus on margins, in terms of the price cuts, lower ASPs, margins were disappointing, 200 bips lower. That's why the stock's down. But I believe that's not seeing forest through the trees. Okay. I mean, this is an AI, robotics, and robotaxi day, now October 10th. That's going to be the story going forward. And I think this is a name where, as this all plays out, I think the street will start to better understand what's happening at Tesla. We're buyers in the weakness here.
Do they have a CEO? Is this guy around, or is he helping Donald Trump and Mr. Vance?
Look, I think actually he stayed a little.
What did you hear in a conference call? I mean, is he running the company?
I think he is more from a, what I'd say, a pilot on the plane at Tesla today, adult in the room, than he's probably been in the last few years. Because I think, Tom, the biggest thing is Musk recognizes this is a pivotal historical time for the Tesla story in terms of robotaxis, AI, as well as now demand stabilizing in China. But also, we go back 3 months ago, the haters hate this name. They thought it was 140 going to 100. Look where the stock's at today. Yep. That's why I think you always have to just be cognizant of that, as many of, they hated 50 billion, despised at $1 trillion.
Yep, exactly. So, Dan, just looking at the stock just year to date, it's really an amazing story. Started the first 4.5 months, stock down 50%. Since late April, it's rallied 75%. So we're now year to date, we're pretty much kind of even here for the year. What does that kind of move tell you?
I think it shows that Wall Street slowly is now starting to understand this is an AI robotics play and not a traditional car company, because you'll have 6-7 million vehicles on the road. And I think that lays out what will be the next chapter.
On AI CapEx spend, what can you take from Google last night and bring it forward to next Wednesday and Thursday, Microsoft and Apple?
I think it shows AI revolution. Like we've talked about 9 p.m. and a part that goes to 4 a.m. If you look at those CapEx numbers, look at that Google Cloud, I'm more bullish on Alphabet today than it was 24 hours ago.
Why?
Because you look at Google right now, Google Cloud is on a run rate 40-50 billion. CapEx ramping, search and advertising continuing to increase in terms of that rebound that we see. And this is a company that has the mojo back. They are on the offensive, not defensive. And I think some of the parts, AI adds $30 to $40 per share to the Google story. It's bullish as a read-through from Microsoft as well as Amazon.
This came up at dinner last night. Do you partition AI into this group of companies, that group of companies, or do you blend them all into a Dan Ives continuum?
No, I think you parse them out in terms of the basket. The semi-auto, in terms of the AI plays, the software AI plays, where I view those as the second derivative, the cloud stalwarts, Google, Amazon, Microsoft, and then as we talk about a lot, Apple the AI story. I continue to believe the AI piece of that Apple is still not being.
Which has the most predictable cash flow forward? Which is the conservative bet for conservative listeners and viewers within those buckets of AI?
It's that company in Redmond. Nadella and Microsoft, that is right now the best bet in terms of AI, in terms of where we see on spending, Azure, Copilot. It's kind of their world, everyone else paying rent from an AI perspective. Google narrowing the gap, but it just goes back to we have $1 trillion of spend. So if you want to sell it on these kind of knee-jerk reactions, go ahead, bulls will buy them.
I mean, you look at Microsoft, it's up only 18% year to date. What do you think is not, I mean, that's excellent performance, kind of in line with the market, but is this something that is not being fully recognized by the market in your perspective?
Well, because I think investors that have missed it, they keep waiting for the shoe to drop. AI, it's hype. The valuation doesn't make sense. They're waiting for some negative aha moment. But the reality is that you, as Tom talks about, CapEx, follow the money. Mm-hmm. You have hundreds of billions. Where's that going toward? Microsoft, Google, Amazon, of course, godfather of AI, NVIDIA.
NVIDIA, I mean, again, the stock's up 150% year to date. It seems like that's where investors are kind of piling in on the AI trade. They're not thinking about maybe that second derivative.
It goes back to, no, we are fully there in terms of godfather AI, Jensen, NVIDIA, and now that train is going to continue to move full steam ahead, but not focus on second, third, fourth derivatives of this AI revolution. And we talk about Apple is going to be a huge front and center as a second, third derivative, because the consumer AI revolution will now go through Cupertino. And I think more and more investors have started to understand that. That's why the stock from WWDC, the 190 to 225.
What do you see in China?
I think China...
Luxury's getting killed in China, according to Louis Vuitton.
I think China continues to be very choppy from a spending environment. But the one thing I've seen in terms of mid-market Tesla, if I look at iPhones in China, that's actually been a turnaround. So
talk to us about that, because that was a real significant fundamental headwind for, I think, a lot of investors.
Well, I think part of it is that there's specific tailwinds that Apple has, because you have about 100 million iPhones that are in window of an upgrade opportunity. Definitely cold tech war, U.S.-China started to abate a bit. But it comes down to like that, the mid-market consumer in China is spending, but where are they spend? You could be like negative for Nike, but Apple, Tesla, others, to bet on the China doomsday, I think that's the wrong move.
Did you get a call from the chief of marketing at Wedbush? You now have people out dressing like Dan Ives.
No, that's a bad
Angela needs to get a life. I mean, it's a great photo of her here, and she's got the green coat thing going with the flowered top.
Okay.
Like Ives. I mean, there's a trend here going.
Well, but look, just like there's a trend for Keene. I mean, you have many kids. They try to dress like
true,
you.
But
so the point is, it's just, I think it's gone from the Keene. They're trying to follow the path. No one could ever match you. And I think it's just one of those things where it's a combo. It's kind of a combo. So I think what people are trying to focus on.
I mean, is the Arnault family talking to you? I mean, can you see like a Balenciaga tie in here? You know, a collab.
Yeah, a collab.
You know.
And look, I haven't worn a tie since I think probably last time, Mets won, World
Hey, they won 3 in a row against the Yankees. Do the math.
I'm bullish on Mets.
Are you?
Yeah.
You really think so?
I
Should
think
they trade Alonso?
No. Alonso's core part of the match. Look, I believe we will be in the playoffs soon.
Some of the parts, Apple right now.
I mean, I think some of the parts you ultimately get to a stock that's $75 to $100 higher. When I look at Apple, 300 to 350 is where I kind of view that some of the parts as it plays out.
I wasn't awake until Ives walked in. I mean, his shirt alone is waking me up.
Yep. We didn't even get the Penn State.
Dan Ives. You take a look at the front pages. The Lisa Mateo Hour. She's on fire today. Lisa, what do you have?
All right, a question for you first. Have you ever sent your kids off on a flight by themselves?
Yes.
You
just did it.
You just did it. Okay. How old? Were you nervous? How old were they?
Whole time.
Yes.
Flight tracker, monitor it the whole way.
Oh gosh.
Yeah, total agony, and she was not young. I can't imagine people flying 10-year-olds around.
Yeah. Have you, and you've
Yes,
been young
but probably
at that
like
age?
14, 15 probably.
Well, I did. I sent my son when he was about 9 or 10 to see my mom in Florida.
Ah.
So, you walk
Sure.
the kid up, they let you do that. The other parent is on the other side. But can you imagine these kids, unaccompanied minors, stuck with the Delta mess?
That's right.
So this is the big story right now. A lot of parents sounding off on social media about it. This is from the Washington Post. One Georgia man said his kids were stuck at 3 different airports. Parents spent hours on hold with Delta. They said the airline didn't ask about their kids' individual situations. They didn't offer to book flights on other airlines. So the parents had to do it. They were searching. Some airlines, switching to other ones, cost about $4,000. They took long road trips to go get them. There was one parent who said on Friday, her kid was in North Carolina, not coming back till today. So it's a little bit crazy. Delta didn't say how many unaccompanied children were affected by it, but they did say that they apologized for any confusion, frustration. But I can imagine a lot of parents
I still don't fully understand why the problems are specific to Delta.
Because they had the most problems with the outage, the IT outage.
Yeah, and I don't know why that was Atlanta specific.
Mike McKee said it was pilot-driven. Moving pilots from point A to point B, and all the serious rules about pilot exhaustion that are
$4,000. They
what
took
else
long road trips to go get them. So a lot of Tom, you would probably know more about this than me, but more families turning to Europe for their kids' college decisions.
Is it
Yeah,
cost?
crazy. Delta did
It's a
lot
little bit cost, but it's more going on than that. The Times of London had an article yesterday, cover article. Frontly, they didn't do the royal family. They did European colleges and UK colleges are broke. Because they're giving away tuition to UK kids, so they need the American kids desperate. Mike McKee said it was to come over and pay tuition, even if it's less than point A to point B, and all the serious rules about. And it's a real trend in exhaustion in the schools I'm dealing with. What else say it's definitely a rising
trend. So a lot of Tom, you would probably know more about this than me, but more families. And they had Business Insider. They spoke with this family who said basically they have a son going to college in France, a daughter going to college.
It's a little bit cost,
and they said the reason is that their son did well in high school, did well in his SATs. He applied to 30 colleges, got waitlisted and rejected from all of them. So he just wound up going to a junior college, but they told him about this program called Beyond the States, and so it helped them to find a college. He found a business school in France, a 3-year program, $13,000
tuition,
a year.
even if it's less than way lower than the norm, but NYU or whatever. It's a heated thing, and it's a real trend in the schools I'm dealing with. I will say it's definitely a rising. Part of it's a rebellion against 70.
Yeah, most definitely. And they had Business Insider. They spoke with this family who said basically they have a son going to college in France, a daughter going to college in Spain, and they said the reason is that their son did well in high school, did well in his SATs. He applied to 30 colleges, got waitlisted and rejected from all of them. We've been talking about the Olympics, so he just wound up going to a junior college. Today they have soccer. No, Beyond the States. But there is another athletic event underway that you might not have heard of. France, runners setting off a 3-year program, Valley. It is the world's toughest.
So that's way lower than the norm.
97 runners. They went in the middle of a rainstorm late Monday night. It's called the Badwater 135 Ultra Marathon. Men and women, a lot of different countries, ages from 19 to 69, doing this. 48-hour. It's ridiculous.
And
daytime
there's pluses and minuses. Right now in Death Valley,
what is it now?
It's 96, and the sun hasn't come up. Tomorrow, Thursday, is the high, 120. Next.
We've been talking about the Olympics, right? In Paris kicks off today. They have soccer. No. But there is another athletic event underway that you might not have heard of. Runners setting off in Death Valley. It is the world's toughest foot race. Okay, 97 runners. They went in the middle of a rainstorm late Monday night. It's called the Badwater 135 Ultra Marathon. Men and women, a lot of different countries, ages from 19 to 69, doing this. 48-hour. It's ridiculous. Daytime temperatures 120 degrees.
Right now in Death Valley,
what is it now?
It's 96, and the sun hasn't come up. Tomorrow, Thursday, is the high, 120. It's our weekly.
No,
I've never been.
Awesome. I took the kids there, and it is amazing to see that. The whole environment is just extraordinary. But again, you do all your activities very early in the morning, and then kind of midday. If you're not sitting in a pool of water, you can't be outside.
But is there like hotels?
Oh yeah, guilty of this. It's all over social media.
Yeah, but it's not open in the summer. They close down for the summer, so we went probably like spring break, like March or April.
So a hitter like you rented the Hummer.
Okay, you can.
And you play Dwight Yoakam driving out there.
Absolutely.
Yeah, I can see it.
Next. And I'm sure a lot of those runners had to increase their protein intake, but it's not just athletes. A lot of people.
It's our weekly
lecture. Yes, exactly.
Studies say, this was in the Wall Street Journal, people want more protein, less sugar in their desserts.
So I don't know one person who wants less sugar in their desserts.
Okay, well,
So I'm calling out the Wall Street Journal.
Full disclosure.
Such as?
I am guilty of this. It's all over social media. People using cottage cheese in their cookies to make ice cream. I've done it. Believe me, I'll bring it in for you guys one day, okay? You're going to have to test it out. Greek yogurt in cheesecake, that's one of the things. Okay. But here's the business side to it. So the Wall Street Journal says food brands are starting to kick in. Fairlife, it's this product sold by Coca-Cola, right? It has more protein, less sugar than regular milk. 30% jump in sales this year from a year ago because more people are using it to make dessert.
Seriously.
Whole milk.
Seriously. It's all in my refrigerator, and I just look at the stuff and I go, are you kidding
me? It is. Okay, see?
Is almond milk and soy milk, is that legitimate, or is that just a spoonful of sugar? It's like Mary Poppins.
I'm not on the almond milk. Soy I can't do. My daughter's allergic. But they're saying the ones with almond milk does have more protein, or almond milk has some protein in it too, which is good.
Ariel says the New York Yankees use the sugar-free
exactly.
almond milk.
But if you're lactose intolerant, that's the way to go. See, but it's the whole idea of protein making you feel fuller for longer, increasing your muscle. So that's the whole thing. But a lot of companies are starting to do this. Dietitians are saying, the gig is set up. Maybe you get a lot of it in your meals.
So does Mr. Mateo, is he subject to all your crazy dietary
to my protein cottage cheese ice cream? Yes.
It's like torture, absolute torture. Lisa Mateo, thank you so much for the newspapers.
This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.